So one strategy traders everywhere use is buying at support or selling at resistance, but it always surprises me when people group that into one big strategy. It's a buying at support strategy. To me, there's so many other parameters and variables that need to be put into that to make it into a feasible, profitable strategy that it doesn't make sense to just say I'm buying at support, selling at resistance. So I'm going to use buying at support or support won't hold as an example, but of course, flip it on its head for resistance or that it will hold, but you can see what I mean in a second. So what are the clues that I'm looking for, and what clues that have actually helped me loads understand or give me some probability that support is or isn't going to hold? The biggest one for me is price position. This is so important, and to me it's so important for any strategy you're using. But if you're using a buy at support strategy, look at the difference here. You've got number one, which is a heavy downtrend, and number two, which is a heavy uptrend. Now, support on this downtrend would be here. There's your support. There's another support here, arguably. And what is your support here? You've got a support here. You've got a support here. Right, look at the difference of where the support is relevant, or relative, should I say, to the price position. Support here is in the lower third, the lower half of a downtrend. So the market's already exhibiting trend behavior. It's already broken through support, and now it's come up and it's testing again a level with the momentum behind it. The chances of that holding compared to a market that's pushed up and is visiting support from the high downwards, and the support is in the upper third of that trend range, is distinctly different. You know, look at the difference in that. And by the very nature of a trend, the very nature of a trend is that it makes new lows or makes new highs. So if you're buying all the time at support, you know, you're eventually you will catch the trend eventually, but how many times are you going to get stopped out before that turn occurs? However, if you flip it on its head and say, well, you know what, I want to buy at support, but I want to do it in an uptrend. So in other words, that is having you buying pullbacks. You are trading with the momentum, trading with the crowd, and the chances of that support holding is going to be more likely. Now, I'm not saying don't buy support when you've got a market coming down to it. However, what I will say is, I'm going to digress slightly from what I planned on saying, is that, you know, as it comes down to a support level here, if this is what I do, and it served me pretty well actually, I will be more aggressive buying support here than I will be if I'm buying here. You know, that you've got to understand the probability of that support holding is low. That doesn't necessarily mean it's not a good trade, because the risk reward can be high. However, we're just trying to work this all into a strategy. So instead of being aggressive and buying right on the button here and putting a stop there, I want to wait and see exactly the behavior of that price to support. If it blasts through, but then very quickly comes back up, puts a tail in a candle, then I know I could take a trade and quantify my risk by putting it there. You know, that's a lot different than if I'm trading this example here and it's pushing up and it's coming down to support. You know, I might then be more aggressive, or I might, you know, let it come through a little bit, but knowing that that's demand is going to come in quickly because we've already had demand, and it's probably going to shoot it straight back up again. So different strategies for different scenarios, different of where the support is relative to the price position. And by the way, if you're day trading, it could be a 1 minute chart, 3 minute chart, 5 minute, fine. How was the price behavior up to that point? If you're swing trading, what's the daily chart like? Where has it come from? Where are we now? And then you've got another issue to concern yourself with, is the time of day. If you're day trading specifically, 8 o'clock in the morning, if the market's gap lower and it's hammering down to that support and you haven't had a big range yet, the chances of it holding straight away to the tick are probably going to be slim. Yes, it may hold, you may get an overshoot that comes back up, but you've got to align your strategy with the market conditions. If you're in a volatility expansion phase and you're trying to use a mean reversion strategy, you're misaligning yourself with the market conditions. It's about using the right tool for the job. And if the market is range bound and is mean reversion, that's when you utilize that buy at support, sell at resistance strategy. If it's looking for new value, if it's expanding its volume, its volatility, if news has come out, if earnings have come out, if something has come out to reprice the market, then using an aggressive mean reversion strategy is going to either mean you have to take a lot of heat, or you're going to end up losing money. So it's understanding the time of day. loads of volume coming at the open of markets. FTSE 8 o'clock, DAX 8 o'clock, US hours is 2:30, and then coming into the close, so 4:30 for FTSE, 4:30 for DAX, 9 o'clock for the US market, and understanding obviously for the currency the transition between the different continents. So, respecting the time of day. If you're in the middle of the night and pound US dollar is drifting up, it's got this kind of trend environment, it's coming back down to support, middle of the night, Americans are asleep, we're asleep, the chance of support holding are probably okay because someone's sitting there with an algo or whatever and they're buying it up. There's not enough supply to come in to overcome that demand, and it will hold. Flip that on its head and say, after you just had some interest rate announcement and the market is motoring towards a support, the chance of it stopping to the tick on it are slim. Yes, it does happen, of course it happens, but overshoots more likely, or even more likely is that it blasts straight through and creates a new value, a new trend. So it's something to think about when you're trading a buy support, sell at resistance strategy.